Okay, hi, good morning, and I think we're almost getting into lunchtime. I think the last panel added in a statement as to say the world is your oyster, so sort of reminded me for lunch. But anyway, let's see what the future holds with this panel that we have. Very outstanding panel. Datuk Umar, nice to see you again. And Encik Najmuddin, lovely to see you again too. So I think before we start the panel discussion, I was thinking maybe I'll just set some sort of context to how we would like to shape the discussion, although what the future holds is really up to us to guess. And I think even the last couple of panel discussions that we had, there were already some insights being provided. But I guess at this point in time, we've come from the past. We saw the present as to what the opportunities that have presented themselves. And I think this panel, you have a little bit more of, you need to look a little bit into the crystal ball and see what the future holds. But the last 2 years that we have seen have been really transforming for everyone in terms of supply chain as to how services are being delivered to consumers. And I think that's what we have also experienced for the financial services industry as well. And one thing that we have come to see is technology, the connector between investors or the public towards the services being provided is omnipresent, right? And it is responding to investor behavior, and it is also shaping as how the industry moves forward. So one thing that has become very clear is that remaining status quo is not an option. And agility and adapting, I think that's the buzzwords that the future holds for us. And so on that note, like this morning, we had an insight into the Capital Market Master Plan. I think that's also a guiding factor as to what's going to shape the industry as we move forward. And there are few, if you look at the Capital Market Master Plan by the Securities Commission, I think that was unveiled last month. There are few things, a few trends that are coming up very strongly. For example, the growing diversity and the sophistication of investors, right? And that is going to have a huge impact on the evolution of the industry, you know, for the next phase of it. And that will also have an impact on how services and products are going to be delivered, the connectivity. At the same time, I think we are also starting to see, and I think there was the first panel alluded to it, is the demographic change that's happening in Malaysia. We are heading towards an aging society. So when you get into an aging society, you know, like not too long in the horizon, probably the next decade, the needs are going to change because the aging society, or what was referred to as the silver hat generation, although I think a lot of us, we dye our hair these days to continue to be ageless. So that generation is probably going to move towards wealth preservation and even looking at wealth decumulation. So those trends are changing. But at the same time, the demographic change is also having an impact on the new generation of investors that are coming up, the millennial investors. And the millennial investors are, you know, very obviously more tech savvy and perhaps more open to product innovation, which will help to drive the industry forward as well. And the other thing about from the nation point of view, as we head towards high income status, high income nation status, now what's going to be the impact of that? So we're going to see a new class of investors, which we are already seeing you know, in terms of the high net worth investors, and their needs are going to be different. And also the search for innovation, the search for products, and the search for the service, because I think we're getting into a stage where one size doesn't fit all, right? And this is where the search for SRI, ESG is also coming forth. And this also impacts, the millennial investors, as we see them coming forth on the horizon. So there's a growing interest in that space as well, being sustainable, being responsible, and doing something or investing for the bigger good, as we may say, right? So we have all these trends, and regardless of the fact that whether it's sustainable, socially responsible, things that takes into the bigger good, the quest for yield continues, right? The quest for innovation continues as well. So we are faced with all these factors, including, or rather being enabled by the whole space of innovation and data, big data, AI. So that's going to drive a lot of the trends. So these are the things that I thought of setting a little bit of a context that could guide our discussion to give some sort of a glimpse or insight as to what the future holds for the industry and also the various stakeholders in the industry. Because apart from the fund managers who have to be unveiling or looking into, what's going to be the demand in the future, what are going to be the needs, from growth to preservation to decumulation, and also looking into technology, right? So that's where the whole space is. So with that as a backdrop, and this is the way I look at, the things that are driving and shifting change, coming from the past, looking what happened in the present. So I would like the panel to just think about these factors and any other factors that they think that would drive the shift or would herald the new age, right? And normalize the so-called new norm, right? So I thought I'd just set the context about the accelerated changes that we are facing. And perhaps with that, maybe I'll invite Encik Najmuddin, because you are in the thick of it and you have faced a lot of these trends as well, and you're responding to it from what I gather. So perhaps I let you take the stage as to what the future holds.
Sure. Thank you, Jasbir. That's a wonderful and excellent introduction to what we're going to discuss today. I mean, you mentioned about new norm. Look at us. We are at home doing this conference. So to be honest, I'm still not quite sure what's the new norm, because we're not back at the office yet. We've heard about reopening of the economy, and I'm sure Dr. Umar also can see this, the reaction on the stock market. I think we've seen the stock market has done very well this year. So you see the work that we have done, we've looked at the future 5 years ago, really, and what we have now, we are living, at least for us, we are living the future that we think is going to happen in 5 years. So now, looking at what's going to happen in the next 5 years, and obviously with this pandemic, we really need to, relook how we can, stay relevant, and how we can be, relevant to the investors, moving forward, especially on our, delivering our services. You mentioned about at the end of the day, investors still looking for yield. Anyway, I just have a couple of slides just to, to have, it's not so much of, very formal sort of presentation. I think a lot of the content that I have in my slides, I think most people, who have seen and who have read. If I can move to the next slide, please. Basically, just to give you an idea. So like I mentioned, we in 2015, I think the Securities Commission and the central bank actually have talked about ESG and sustainability. I think globally, it's been talked about, for quite some time. So we saw a niche, as it is, we're already a full-fledged Islamic fund management company. There's a lot of, we're sharing the same sort of common values like the, SDGs, SRI, and so forth. we've launched the first product. So 2015 to 2019 seems very quiet. I think 2018, 2019, I think a lot of the fund houses are warming up to ESG, but we see a huge spike all of a sudden in 2020. Yeah, from only 1 or 2, now we have 32 SRI funds. Even when we launched our first ESG product, there's still no SRI framework yet. So in a way, we felt like, okay, luckily we've looked at this and we've done this. Now we have a wide range of ESG products, and then this conversation just started. To us, what the future holds is impact investing, responsible investing. It's just gonna be, it's already a mainstream. It's just going to be part of our life. If you have a solution for your client, between ESG fund and non-ESG fund, I think post-pandemic, it's a no-brainer. Most investors will definitely choose a responsible fund. So I think to the consultant and to many of us, if we have not, built up our capabilities and understanding what is SRI, what is ESG, what is sustainability, we're quite behind that. So we need to quickly, understand this. Because the thing is about ESG and SRI, it's not like Sharia. Sharia, it's coming from the Quran, so it's very standard. The principle, it has a standard principle. But for Sharia ESG, as different parties, different groups have different views. Yeah. But again, we need to start somewhere. So one thing that we have established, we are actually in the 700, 800 billion industry. Hundreds, probably thousands of products. I think this will be disrupted because I'm sure clients will be interested, to know whether, we as a fund manager or we as an advisor, do we have a product that will make an impact investing, or can they become an impact investor? So responsible investing, it's already part of us already. If I can move to the next slide, that's one on sustainability. The next one is we're seeing these new asset classes. We're so used to equities and bond or suku, yeah. But what we're also seeing that the SC is taking the lead, to introduce new investment instruments, like the crowdfunding, like the P2P platforms, yeah. So of course, the underlying to this is somewhat similar to a bond. It's financing in a way, yeah. So, but it's also introducing a new asset class, yeah. Again, this is also an opportunity, not just for fund houses, but also for consultants. There's also new asset class that probably can address. Because at the end of the day, we know all our investors, whether they are high net worth or the masses, they want a product with high returns with very low risk. See, it has never changed. I've been in industry for 20 plus years. It's never changed, and it's always short term. Yeah. So, but the good thing is that SC has, I think if you read the SC's annual report 2020, there's a lot of information how they have seen growth on P2P financing platform. Yeah. So, and even recently, with the on discussion of the cryptocurrencies, that now we have RMOs, So again, this is introducing the new asset class. So there's opportunities, the regulators actually have provided the opportunities, providing clarity to the industry, both the buy side and also the sell side. So I guess how do we then, take these opportunities? So this is already happening now. Yeah. Next slide, please. So even for us, just a quick case study on BIMB investment. What we're seeing is, we're going to partner with Arabesque. They actually have developed an AI sort of portfolio management system. Literally, in a way, we do not need a fund manager moving forward. We don't need a portfolio manager moving forward because everything is AI driven. Because as you know, at the end of the day, we are, fund managers dealing with data. Of course, there are many school of thought and say, like, oh, we still need active fund managers. It's different, machine. But the thing is, machines are progressing. They are learning, as we speak now. I mean, there are more advanced technology out there. But what I'm saying is the technology is already available now. You can actually do a strategy, an investment strategy in just 10 minutes. You just can customize it, whatever the strategy is, then you can develop a product. Even to a point that you don't need to create a unit trust product anymore. You can link up to any platform, and the individual investors or any investors can actually customize it. So this is not the future, it's already happening now. And second part is on the Sharia ESG. Well, the thing is about Sharia ESG is all about getting the data. What kind of data? It's non-financial information data. It's like how you treat your employees, how innovative your product development, your board composition, how you treat your supply chain. Those are non-financial information now. It's been quantified through AI and big data. So in our case, we're able to see companies, their ESG score, their United Nations Global Compact score. And now there's a technology be able to also check on your carbon footprint. It's called temperature score. As you know, the Paris Agreement, the benchmark is 3 degrees Celsius, or is it 2 degrees Celsius? Yeah. So now we can actually measure. So in future, you actually have a product. One is an SI product. At the same time, also whether the companies comply with the climate change. It's already happening now. Yeah. So everything now is being able to quantify and measure because of AI and big data. Next slide, please. So this is an example how we can develop product now. Using AI. We just need a dashboard. We don't need to have 5, 10 people in product development anymore because data is all connected. If you want a China strategy, we can do it immediately in 10 minutes. We want a European strategy. We want an Asia strategy. So it's easy now. Yeah. So this is not even the future. Next slide, please. Next slide. Thank you. So really, how does consultant and us, how do we coexist, with all these advancement in technology and in sustainability? It's a very tricky question. But I think one thing for sure, I mean, we understand and we learned the last 2 years, we now cooked down in our house, right now where we are now, we are with our gadgets, with our phones, we go online a lot, we actually have a system now how we're going to pull data and information. So similarly to our client. So the key thing is the speed of us getting the information to the client now. If the client are so used to getting information now, from online or whatever, data being pushed. So how can we be able to provide information? So real-time information, of course, is key. Yeah, you can't be sharing information that is outdated, even 1 or 2 days. Yeah. So, and also I think it's important also to really focus and segmentize your market, I guess for all consultants, I think it's worthwhile just focus on the high net worth. I mean, let all the robo-advisors and all that, to handle the mass market, yeah. But I think again, if you are targeting the high net worth segment, also mean that you need to, you need to have a different skill set. Yeah, you need to be more equipped. Yeah, I think one of the areas that the high net worth investors also struggling to understand is on sustainability and also on ESG. So I think this is also an opportunity for consultant, to brush up your knowledge and understanding on ESG. Because if you're representing any fund houses, those fund houses would have their own ESG philosophy. So understand that clearly. And then I guess consultant, this is a model I think we have to agree, because in order to, at the end of the day, you're managing the client's portfolio. So you wanted to be really honest about it. You really are committed to manage the client's portfolio. So you really have to move from this very transactional sort of relationship to more advisory, more profit sharing sort of model, meaning that if you don't make money, I'm not going to charge you. But if you make money, let's agree some profit sharing. Yeah. And then of course, we're so used to this virtual environment. So I'm sure we'll be getting better on our virtual engagements with clients. So how we can be more efficient and clearer on this one. So again, how do we coexist with digitalization? How we can service our clients better? I mean, of course, with digital, we don't need to expect the client to call us and then we fax them the statement or email them the statement. So we should be able, if the client just want to know what is their current net asset value or portfolio value, they just be able to look at the app. Yeah, but I think you should reserve your valuable advisory for the client. Yeah, so client updates is very important. The thing is, sometimes the clients are not happy, not because the fund is not performing, it's because that they're not getting the update, because most of the investors understand they are going into investment, it comes with risk, it's very important that, when market is down, during uncertainty, you need to engage the client. I think that it's given, yeah. So that really differentiates between you, an effective consultant or not an effective consultant. Elevating skill set, I think this is an ongoing thing. I guess one area is that I guess most of us need to figure out, how you be able to upskill yourself when it comes to digital and also sustainability. Yeah, product pushing is a big no. It's not going to be the way forward or even now. Yeah. So yeah, and the thing is, a lot of feedback that we got, you have Wahid, you have Rais, you have Best App, you have all these robo-advisors, you have Stashaway and so forth, So it's very difficult, for you to, get clients. But the thing is, like I said, you need to really focus and define who is your target market, because as you know, the high net worth clients who has R1 million will not be able to go through robo-advisors. And if they can, they still want to talk to someone, if anything, at least now, yeah. I mean, at least we are in that kind of market, yeah. Even the current infrastructure would not allow you to invest R1 million, right away through a digital platform, yeah. So I think if we understand who our market, our segments that we're targeting, then we can be able to design our service, be able to design our products. And obviously, it cannot just be one product, it cannot be a product push. Next slide, please. I think this is my last slide. So same thing, I mean, we are facing this changing landscape. And when we are able to go out, when the economy is really reopened, so I think very important that we will prepare with this new future. So at the end of the day, as consultants, at least, why we are in this business, because this is a great profession, because you are able to provide advisory when it comes to wealth, to clients. You're like a doctor, but you're a doctor when it comes to financial health. Yeah, and on top of that, this is a profession that you can work until your 80s or 90s. And the great thing is, when it comes to advising on investment, it's about recurring income. And if you work closely with the client, be able to effectively advise the client, you will see the income, coming to you. Yeah. So that's basically my life side, because some of the points that I have in my slide already shared before. So that's my thoughts, Jasbe, basically.
Yeah. Thank you, Naj. I mean, that was really very insightful. I think you've covered a large spectrum of what we think an inkling into what the future holds. I think you talked about a few points, and I just want to bring them up here. And firstly, is in regard to innovation. And innovation, I like to dovetail it as well towards things being sustainable and also taking into account the bigger issues at play like ESG and all that. And what fund managers can do in response to investor requirements and also changing investor appetites and trends, the industry can respond to it. However, at the end of the day, you need to connect the investors with the product or with the houses, right? And for you to do that connection, I think the distribution channels becomes very, very important, because we are talking about supply chain at the end of the day. But for that to play an effective role, that needs to evolve as well. That needs to evolve as to what are the way products and or services are distributed. How do the intermediation channels, regardless whether they're UTCs or institutions or whatever, how do they make themselves, how do they up their game as well? Because they need to know the products, they need to know the services, they need to know how to present it as well. So there's a huge upskilling and that's involved, right? So that's where the connection of the intermediation channels becomes very, very important. Without the intermediation, you can have the best products. You can have products that are responding to investor demands based on, whatever data that comes to the product manufacturers or to the service providers. But if you do not connect them effectively, you may lose out. You may not hit the sweet spot. Right? So delivery of service, regardless of the channels that we use, I think is important, because they need to transform, they need to innovate as well, right? So I'm very glad you brought up that point, because I think that's a very critical point. And you also talked about technology and the AI and how big data is also disrupting. Apart from services, it's also disrupting the way the products are designed, whether they're on platforms, whether they're in conventional houses, right? So I think that's also very critical. I like the point that I think you made an inference too. As we move forward, it's not a substitution, but it is a coexistence. And it is a leveraging, from the strengths of every sector as well. So with that, I think there are a few points that you brought up that I picked up. There's relevance. We need to focus on relevance. We need to focus on innovation. We need to focus on inclusion, because we need to be able to include everyone into this whole investment management space, right? And of course, digitization. Yeah. So you made a lot of points, even though you had those couple of slides. And also, like, where are the areas for upskilling? So maybe with that, we could segue to Datuk Umar. And I know Datuk Umar, in Bursa, some of these issues you are also dealing with, because you also have your delivery channels, you have your intermediation channels. So perhaps I could get you to share your thoughts as to what does the future hold for the investment management industry, and the future, how is it impacting the various stakeholders in the game? Because there are many stakeholders, and we won't be able to cover them. And what are some of the insights that you have developed that you think will be very useful to also get the investment management industry to continue to be the critical mobilizer of funds, and also in terms of investor needs? Over to you, Datuk.
Thank you, Jasbir. And first, thank you for FIMM for inviting me to join the panel today. And really, between yourself and Naj, my work is done. But I want to take on a few of the themes. Broadly, we have what the future holds. So what does product look like? I think, technology is accelerating what is the democratization of investing. We all remember Bursa Reddit. We all remember Wall Street Bets. And more importantly, our audience today, consultants. How do you prepare for it? And I think the first thing, Naj talked around it, auto-CIO, opportunity or threat. Auto-CIO is the first part. The other piece of the pie is actually distribution. For those of you that know me, I was a board member of MACL and was the MD of the owning company. And I actually was a board member of FIMM at one stage. But I always used to say distribution is king. Manufacturing is manufacturing. So you look at it. I mean, when I look at our market, as of August, funds under management by the local fund management, some 279 billion. Total market cap's probably running about 1.7 trillion, so it's not small. It is some 15% of our market cap. Now, I think the key thing for all of us in the industry to start thinking about is what does the future hold? And what the future holds is distribution. If I could pose a question to our audience today, do you know the share of wallet that you have of your clients, of your investors? And how is it distributed? Is it sitting with yourself? I'm sure they have properties. We know fixed deposits have been growing month on month despite through COVID. We've seen an influx of funds into the share market. But I think so there's a share of wallet question, and then there's a more important fundamental question, disintermediation and compensation. Now, I'm talking about how we earn our money as consultants. I believe what we're going to see is there is a push for fee for service. There's no doubt about it. This is something we really need to start thinking about. So as a consultant, you're tied to a house. Now, your clients will now be maybe asking for cryptos. They may be asking for different product classes, some of which your manufacturer can service, and there are other things they cannot service. So are you going to, as consultants, do you pivot into fee for service? Because it is coming. It's a theme through the whole industry worldwide. We're seeing the push for lower fees and lower commission rates in insurance, in takaful. If I draw from my own industry, if I just look at the stock market, remisers were earning 100 bips as management fees. They're now earning 30 bips. That's a lot of difference. However, we are introducing a profit sharing, which Nudge touched on, for remisers as a way to try and broaden their base. But I think the real key for us to look at is I have a philosophy. What we want is investors to enjoy the private banking experience at a lower cost point, at a lower AUM. Now, how will that be achieved? That's going to be achieved through technology. Now, is that technology going to disintermediate us from the market? Will we lose our contact point with our investors? I think that's the question we really should be starting to talk about, is how do we pivot and how do we ensure that we are relevant to our investor base? Now, as we stratify, and we look at our retail investor base and we stratify it, we look at how people invest, what their behavior is. We also look at their age demographics as well to see what's their risk appetite. And it's quite clear, younger investors who will be our future investors have a very high risk appetite. Yet, we also know that investors want no risk and high return. So there's a certain gamification that we're seeing in the investing space that we need to acknowledge and be understanding. Then so you have, as a theme, you have gamification. There's another thing, ESG and SRI. Now, the question then to ask is, will your investors trade off? And this is a manufacturer's question rather than a consultant's question at this point in time. Will your investors trade off long-term sustainable profits, or do they think they can outperform the market by swapping funds? So they go North Asia one week, they go Southeast Asia the next week, and then come back to Malaysia. And because one would think on the platform, your preferred investors can swap funds at minimal cost or no cost. Bearing in mind we work so hard to capture our investors that they will try and look to maximize their outcome rather than being set and forget. But there's another group of investors who set and forget. Now, drawing on my previous experience, what we saw, our largest investors would actually often go online, and we'd see them looking for investment reports, and they would actually rebalance their portfolio themselves rather than relying on their consultant. So there's a whole degree of empowerment. Now, this degree of empowerment is going to continue. And so the interesting thing will then be, looking at what Nigel was talking about with Auto-CIO, is Auto-CIO, then empowerment tools will come. Now, how do we ensure that we are creating value so our investors stay with us? And that's the real key. And that gets back to the point that Nigel was making about upskilling, understanding product, and that gets back to my other point about share of wallet. I am very focused on share of wallet. One of the key things we're looking at the exchange is where are investors putting their funds. There's so many different investment choices: venture cap, P2P, longer term investments. We have property, of course, and the traditional bonds. Now, as manufacturers bring out new products, I envisage there will be a period going future, and you will have seen the exciting products that are often offered to private investors. I foresee this being offered on platforms to mass affluent customers. So you're going to actually see a whole, that level of service using a little bit of AI, using technology. We're going to delight the investor, because by delight, the investor demands to be delighted. They want timely advice. They want interesting advice. They want you to anticipate their need. I envisage that once I can see a future state where we know what people like to buy, and we will give them analysts of companies that reflect their interest. And that will be the role of the fund manager, to provide that advice, provide that analysis, which is then, if you like, it's very targeted. So would you be interested in this company? Or it is more subtle. But I think we really are, to remain relevant, we need to skill up, and it will be a fee-for-service future. And so I do envisage a future where consultants will be selling more than just unit trusts. They should be selling insurance, they should be selling advice. And in fact, you may see a consolidation of, bearing in mind the respective professional bodies. But I envisage, if we look at the Australian experience, large consultant or fund management practices pivoted into life insurance, general insurance, accounting, and into providing legal services for their investors, because you moved to a fee-for-service environment. So you couldn't earn fees from AUM. There was no more trail, and there was certainly no more commission.
Okay. Thank you, Datuk. So I think that's been really, really very insightful. And I think what you have brought up is, what does the future hold? I think the modalities are starting to change, right? And we need to be, from what I hear, we need to be very open to the various modalities that are emerging, because the modalities are the one, when we talk about being relevant, the modalities are the one that are responding as to what's being offered, how it's being delivered, what investors want. So you can, I think the very traditional modality that we have been experiencing, that has also driven, the growth of the industry, has been the very traditional face-to-face, right? And it has also, but there is now, what we have seen, during the last 2 years, is there came to a case where it became very much execution-oriented. I can execute, I'm empowered, I know what I'm looking for, I know how to use technology, and I'm just going to go towards execution, to an execution mode. On the other hand, there's also a hybrid mode that's emerging, that was referenced, in terms of, I would like to do an execution mode, but I still want someone to give me the advice, because I don't have time to monitor. And we are in an environment of what the Securities Commission calls a multi-layer market. There's so many different kinds of investment options on various kinds of platforms, like what you talked about, ECF, P2P. That's a lot to take in for an average investor to be able to monitor that and to see how that fits in with their long-term goals or retirement planning. So as a result of that, there is a huge need as well to add value, to bring it all together. So the investor at the end of the day can make a very informed decision that fits in with the retirement planning and the investment goals. So, so those are very critical points, and I think we need to be responsive that changes are happening and we need to adapt. So based on that, just now I also want to mention we've got some questions that are already coming in, and if there are more questions coming in, I think this is an excellent opportunity to tap in. Just to move away from the product innovation, this is a question, and perhaps I would pass it to you. It's about upskilling, reskilling. I'm not sure what it is, but there is a need for capacity building, right? In terms of those who are connecting products to investors. So the question is, in what areas should they technically be upskilling or bringing themselves to the level where Datuk Umar talked about adding value, pivoting towards adding value? Do you have some thoughts in this area? And do you think it's an area that, it should form part of a curriculum that whoever comes into the industry, it is incumbent on them to be aware of digitization, and also to talk about how the whole platform and digitization and technology can be both an enabler and a facilitator, not only towards products, but even to their own, the way their services are being provided. Do you have any thoughts on that?
Yeah, sure. I mean, I think I'll just touch on two things. One is, let's look at how we get, UTC or professionals, coming to our industry. We start from there. I think currently the minimum, there is a minimum requirements, I'm not sure whether it's still SPM or diploma, but you have to pass the QT exam. So I think we need to look at the QT exam, whether the QT exam that's been designed, be able to prepare our professionals into this industry. I think I guess the curriculum or topic on sustainability and ESG, I think is still not there. I'm not sure about, I don't think alternative assets probably not there yet. Probably that's something that we need to look at. We go back to how we prepare people who like to enter into this industry. And then, of course, it's a two-way thing. The federation and the industries need to work together. I think it's timely that we revisit, the curriculum, the content. So that, if we are moving from transaction to advisory, upscaling our, professionals to be more, long-term. So we need to look at both the qualitative aspect and also the quantitative aspects.
Right. Okay, thank you. I think that's very insightful, and perhaps the organizers could take note as to, what does the future hold for the way that we are setting the competency standards for various distribution channels. There's another question that comes up, and you've actually touched on it, and the thing is, like, the way we are evolving, and we talked about being product-centric, we talked about being, just one solution for everyone, and what's the current product to be sold. Do you think that now the time has come for us to actually, to let the UTCs or the distribution channels to really provide, to have the ability to provide on a whole spectrum of products, regardless as to whose products they are? It could be an ESG product or an SRI product, or it could be actually products on other platforms as well. Do you think that the time has now come for us to start thinking about that as a strategy?
Yes, I think the fundamental to this is really, it has to come from the customer perspective. It has to be coming from the client perspective. Yeah. you know, if we are talking to a high net worth or any individuals, you know, we really need to understand what are they looking for in terms of, you know, creating wealth or preserving wealth, or, you know, just managing wealth in general. I think a lot, if you talk to many people, you know, I just want to make sure that, you know, I have my money enough retirement, I have for my retirement, I have for my children, you know, I want to be able to protect my family, you know. So those are basically securities that most people want.
Yeah.
So, and you as an advisor, you need to be able to, you know, equip them. So you cannot just go there just with a unit trust product.
Yeah.
You know, I think
okay, Naj, I just got a reminder. I just got a reminder that, you know, we've got 2 minutes left, and I thank you for that point.
Sure.
Datuk Umar, your last, you know, gazing into the crystal ball, what is it that you foretell for the industry? You've got 1 minute to give your insights.
Share a wallet.
Share the wallets.
I think having a single product line is not going to be the future state. More importantly, but more challenging for all of us, all of you in the industry, rather, at this point in time, is you are tied to a manufacturer. That manufacturer will not want you selling other people's product. And therefore, you will have a problem when you want to. So you're going to have to gain the knowledge, to have the requisite requirements to actually give advice, and then provide insurance advice, provide takaful advice. But this is the future state, and you need to arm yourselves, dear consultants, because commissions are disclosed now. It will not be long before your investors will be empowered to make their own investments, and you'll see the assets under management that you enjoy today begin to dwindle as they move to lower cost platforms.
Yeah.
Unless you delight your investors.
Thanks. Yeah. So financial wallet, we all want to share of that. How do we add value to it? And Naj, I like to come back to your earlier point. Information is king. Whoever has the data is king, right? And so anything, one more point from you on the Sharia space.
Sharia space, you know, the great thing is Sharia has been refreshed because of the conversation around ESG and sustainability.
Right.
Yeah.
So watch that space.
Sharia 2.0.
Yeah. Okay. Sharia 2.0. That's the future of it. So I think with that, unfortunately, we don't have more time. I think if we had, we wanted to discuss a lot more, right? So that's the thing about the future, you know, it's unlimited. The potential is unlimited, and there's so many things that are happening. And I think the other one is also retirement planning, right? The generation of millennial investors who are coming on today, whilst tax savvy, and they're going to comprise, if they're not already, the future high net worth investors. So their demand for products and services and delivery channels, there's going to be a huge impact on that as well. So they will move from the growth phase onto an accumulation phase and maybe decumulation. So that's going to also dictate a lot as to how the future is going to change, technology and platforms and all that notwithstanding. So on that note, I really want to thank you, Encik Najmuddin, for sharing your thoughts. I think you had such a broad spectrum of thoughts today, from innovation to AI, to data, to upskilling, a lot of points. And you also shared a little bit as to how you yourself, you are inventing, reinventing, reshaping as to how you want to, you're progressing forward. And,
sorry, I forgot to mention social finance. And
social
wakaf.
Finance.
I forgot about wakaf.
Oh, wakaf, yes.
Yes.
Exactly, yes.
Yes. Yes, I mean, we've done it. It's wonderful. You know, customers get their returns. At the same time, we're making impact. People, like I was sharing with Datuk, that, you know, the wakaf, you know, actually benefited people who's building sampan and perahu in ships, you know, in the East Coast, dialysis centers, you know. So we don't have to depend on the government anymore. You know, this
Yeah.
social finance, you know, this inclusivity, you know, this is another, I guess, subset of this whole SRI.
Okay. And on that note, Datuk Umar, thank you also for sharing your points of view. I think you brought a lot of perspective because you yourself are going through it, you know, in the way the stock market itself needs to evolve as well. So the point here is, it's not only the different segments of the capital market, it is the capital market entirely that needs to adapt and be agile and respond to meet the needs of every stakeholder, right? So with that, thank you so much to the panel, and Ibrahim, I'll pass it over to you. Thank you.
Thank you.
Thank you, Jasmine. Thank you, Datuk. Take care.